All right, hey everyone. Just give me a second. I'm adjusting my microphone. Mark here. Mark P Markets. Thanks for joining me for another Bitcoin video analysis. Okay, that should be good. So I am not streaming on TradingView today because I'm not going to go into all the details, but it's a lot of work to actually simulcast onto there, and to only get like 8 viewers and like no one bothers to click on my links. Today, I'm not going to stream on there. So I'm only on here today. On top of that, TradingView restricts what I can say. So, they don't really provide much of an incentive. Anyway, with that being said, if you're new to my stream, welcome. I stream here every Monday. I'm going to be changing that schedule to bi-weekly in August, but I'll remind you of that again, of course, when we get there, okay? Now, so here, just so you know, this is how this stream will work. I start out with the economic calendar very quickly, okay? And then we get into the Bitcoin analysis so we can talk about price action, levels, and potential scenarios for the week. And then I'll answer your questions. So if you have a question about a stock or an altcoin, please share it in the channel now so that when I get to the Q&A portion, I can answer your questions. And also, if you'd like to share what country or what city that you are from, that's always a fun fact. Okay, so with that being said, let's get started. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, people, so you should be able to see me here. Let me just say hello to my regulars. I always got my regulars in here. Hey, Tillin, good to see you. Haven't seen you in a while. Got Kai, Eligius. All right, cool. Peter, and we got Bill in there. All right, James, cool. Winter, good to see you all. Gabriel, welcome. Stian, Jan, hey, all right, people, cool. Also, I put a link to my webinar just in case you haven't registered for my webinar yet. I have a webinar coming up on Wednesday. See, I can't talk about this on TradingView. I'm not, otherwise I would be, flagged for whatever, the community guidelines or whatever, house rules. But I do have a webinar coming up on Wednesday. If you haven't registered for it, the link is in the chat. Register for it. I'm going to send out a reminder tomorrow, and you will get a reminder 1 hour before the event on Wednesday. The reason why I'm mentioning this is I'm going to be talking about specific things about swing trade ideas, okay, components that I use to arrive at an idea. And I'm going to be talking about things like the RSI and how you can actually incorporate the RSI into your trade strategy. Now, just so you know, I don't use the RSI, and I don't plan to use the RSI anytime soon. The reason why I have put it in the presentation is because I know a lot of people use it. They use it incorrectly. It's a very popular oscillator amongst fake gurus and stuff like that. So I want to show a way that you can use it that is plausible and that can provide some value. If I know this, if I know how to use it, why wouldn't I use it? Because I don't need it. Okay, I can get that information or better actually from candles themselves. But anyway, we'll talk about that in the webinar. Register for the webinar, okay? It's at Wednesday at 2:30 p.m. Eastern time. I don't know if I'll be able to have a replay of that webinar. It depends on how the software situation goes. If I don't have a replay, then you'll have to wait until I do the next one. If I do have a replay, I will send that to you the next day, okay? But again, I don't know at this point if I will have that available. Also, just a quick point, something I want to point out about something like the RSI or any oscillator for that fact. When anyone pushes some kind of gimmick on you, like an RSI or whatever, and they make it sound like, oh, it's easy. All you have to do is this. Keep this in mind. If it was that easy, why would a hedge fund or a institutional firm like a market making firm pay a PhD $500,000 a year salary to develop trade systems that don't use the RSI or any other kind of retail nonsense? Why, if it was that easy, would they pay someone that type of salary? Right? That's not a minimum wage salary we're talking about here. Okay, they're hiring the brightest people in the world, and these people are not using the RSI. Okay, so just keep that in mind when you go to a YouTube video and they're like, oh yeah, you just put the RSI over here like this, and look, a buy signal, and look, 5 times it would have given you a buy signal. Please don't get sucked into that. Okay, anyway, I just want you to know that. Also, if you haven't checked out my TradingView article that I published, actually it was Saturday evening, make sure you check it out. I put some insight into there as well. It's funny because you get these desperate fake gurus who have to put their own analysis like on the comment section. I mean, really, like, look, everyone's entitled to their opinion and all that kind of stuff, but I don't put my analysis on other people's analysis. Okay, just so you know, I don't need to do that. Anyway, all right, enough political talk. Let's get into what we're here for today. So let's start with the economic calendar. I'm not going to show the calendar here, as you know, but you should check your economic calendar every Monday. All right, so for this week, what do we have? Starting tomorrow, which is what, the 19th, we have interest rate decision from China. Okay, so I mean, that can move markets if there are any surprises. On Wednesday, we have the interest rate decision from the Bank of Japan, and on Thursday, we have the interest rate decision from the European Central Bank. Now, based on where that European Central Bank, where the euro is right now, that rate decision can have somewhat of an effect. So these type of economic events can move Forex markets in particular. So if you have any exposure to these markets, be prepared for any surprises. That's all you can do. It's not a trade opportunity. It's an opportunity to mitigate risk. Okay. So just keep an eye on that. Those are the biggest events worth mentioning this week. Also, this week, there are company reports coming out. Okay. They're reporting their reports, their annual, whatever it's called. Can't think of the name right now. Their seasonal reports, I can't think of the name. It's escaping me. Anyway, make sure that if you're in any stocks, to make sure you check if they're reporting anything this week, okay? Because that can move the stock if there are any surprises. If it's a big name stock like Amazon or Google or something like that, a negative report or a negative guidance can move the S&P in a big way. And if the S&P moves in a big way, Bitcoin is likely to follow because there's a correlation. So keep that in mind. You have a lot of these mindless people who seem to still think that Bitcoin trades on its own, okay? And it does not. It follows the S&P, and there are reasons for that, okay? The reasons actually don't matter. What matters is it generally follows the S&P, okay? And that's an important piece of information if you're looking to manage risk or gauge potential. All right, so that's the economic calendar. Let's talk about Bitcoin. Now, in recent couple of weeks, okay, if you read my TradingView articles, I had some interesting things going on here. Here, let me just get this little tool over here. It was the previous Sunday, I called an actual short on the TradingView platform. I mentioned the short signal, which was this bearish pin bar, okay? By the next day or two, or whatever it was, price was actually fooling around here in this area. And I wrote an update to that report, which you can see. And I said in that report, there's no technical reason to get out of the short at this moment, but you should take something off the table. It's generally a good idea. Okay, so that's going to depend on how conservative or aggressive that you are. I can't tell you how to do that. All right. Now, at this time, there was no signal to buy, or there was no conflicting signal. That signal came soon after, though. Okay, and this is what I can't sit there and hold people's hands. If you don't recognize the outside bar, okay, that bullish outside bar is not what a bearish momentum looks like. Okay, the bearish momentum, if this bearish momentum was going to continue or likely to continue, you'd get like a mini, like maybe an inside bar or something like that, and maybe the next day takes out those lows. Right? That is what bearish momentum looks like if it was testing these lows. It never got there. Instead, you're faced with a outside bar. Okay, the range of the green bar is larger than this red bar. Again, that's what wrong looks like in this swing trade idea. So that was your confirmation from the market. Said the market saying, I'm not going lower. So if you want to get out now, you should. Okay, otherwise you're taking more risk. So the market worked its way higher, all right, over the next, as the week continued, and look where we are today. Now, you have a lot of clowns and a lot of fools. I mean, forecasting these ridiculous numbers, like 40K, while anything is possible, the likelihood of that is very low. Now, maybe they're playing that game where, like, if it's in 6 months, it's at 40K. See, I told you 6 months ago, I told you it was going there. Right, but if it goes to 10K first, what good is that? So here's the thing. We have to look at what the market is telling us now and how that information compares to its structure, because the structure is really the context, okay? So we have right now this test of the 22K resistance. This zone, 22K to 24K, is still in play. It hasn't been compromised. Anyone that's calling for ridiculous bullish numbers, they're just making them up because there's no structural confirmation here. Okay, like I said, I'm open to whatever the market wants to do, but the market needs to provide some evidence, not people. I don't listen to people. People are foolish. They have an agenda often. They're reactionary. They're emotional. That's not where you want to get your information from. I trust the market. You know why? Because the market is always right. Not me, the market. So I have no opinion. The market tells me what to think. And right now, the market says, well, we have a resistance here, and it's still respecting it at this moment, okay? This is not exactly a bearish pin bar yet, but there is a long tail on it, okay? There are specifications to a pin bar, and the open to the close is still too large to really qualify that as a pin bar. But okay, no problem. This thing is selling activity still came into the picture at inside of this zone. So how does that help us? For one, you should not be buying into this because we still don't have a bullish environment. We still don't have one. Now, things may be changing, and we're going to take a look at that here in a moment, but there's no confirmation. So you have to understand, in a low volume environment like we're in right now, summertime is typically a lower volume environment. And in lower volume environments, markets have the tendency to do very erratic things that can really throw you off. So you can't sit there. You have to take it all very lightly. You can't sit there and formulate some kind of absolute opinion just because, oh, we broke 22K. We're going to go higher now. We're going to 30K. That's complete nonsense, okay? As Jerry Seinfeld would say, nonsense. So again, this is we'll call this a non-bullish sign, okay? You shouldn't be buying in this area if you understand what this area is. If you managed to buy earlier off this support, which some people have, okay, it's an aggressive trade, this is a great place to exit and take something off the table. Will it continue? There's no way to know, okay? We're going to take a look at the S&P here in a moment, but the point is this. If the remainder of this week, you get an inside bar over here, okay? Doesn't matter if it's bullish or bearish, and that inside bar is taken out, you have a new sell signal. That would call for a swing trade short. Now, I don't short Bitcoin. This signal that I call over here, I explained it in the article that I was not going to short it because greed does not drive my decisions. If I want to short something, I have the S&P. I have the euro. I mean, there's so many things to short. I'm not going to short this thing, okay? So, and they all follow each other anyway. So the point is, if a swing trade short develops, okay, in this area right here, you get the signal. Well, if you're a bear, if you're willing to take that chance, you know, you can't really measure your risk here just yet because you need a candle, you need a confirmation candle. We don't have that. Okay, so it's too early to even judge the risk, but the structure and the general environment favor a break of the lows. Okay, does that make sense? So, all right, so hold on a second here. So now, if you do get the swing trade short, which is, if you get the setup and you get the short, you're looking to this area for profit targets. Okay, what is that? 18.8 area, something like that. I mean, theoretically, you should be looking for the 17K low in theory, but if the market's going to consolidate, it may not get there. All right, so you have to be prepared for another reversal, for a range low. But as long as this lower high resistance up here, as long as this stays intact, you know, a lower low is still technically in favor. Okay, no matter what anyone else is saying, no matter what the expert blah 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 are saying, until this structure breaks one way or the other, it's more reasonable, right? Or the market is saying that it's likely to break lower. That's what the market says, unless a new piece of information comes out and changes the story. Okay, we don't have that story change yet here on Bitcoin. When it changes its story, believe me, I'll be all for it. Okay, and I'll change my view as well, but we don't have it yet. All right, does that make sense? So that's Bitcoin. So again, the structure is still bearish. I have to follow the structure. So generally, I'm bearish short term, and a break of low is still favorable until, like I said, until we get a piece of conflicting information. What would conflicting information look like? We clear this resistance, first of all. If anything, it's the first thing it has to do. If it can do that successfully, then I will start to shift my thought process, okay? But I need confirmation. All right, so that's Bitcoin. Now, let me get to your questions. Let me know if you have any questions about that. Let me just catch up on some of these things here. Okay, so let me start answering your questions. So Tillin, he says here, when bond prices go lower, stock market goes up, right? Okay, hold on. Okay, so here's the thing. It's not a one-to-one. I've explained this before. The bond prices and the stock market are not a one-to-one relationship. There's a delay. The bonds, as they move, if bonds move lower, rates are rising. But just because rates rise a fraction of a percent in one day, it's not going to affect the stock market, okay? It takes time for that information to weigh on the stock market. So again, if you're looking at this from one-to-one, you're going to get very confused. Let's take a look at ZN1 real quick, right? These are the bond futures. Now, actually, we can look at, what is it? It's a 10-year, what is it? It's the yield. I think it's, what is that? Let me just look it up here. The 10-year, it's, US 10Y. Okay, so US 10Y, that's the inverse. This is the inverse of the bond price, okay? So this is the actual yield, the interest rates. So the market is not going to move on this one-to-one. It takes time. If the bonds are in this bullish trend, or the yields are in this bullish trend, they're basically going to add pressure to the market. Okay, they're going to add pressure. The market can still go higher somewhat, even while rates are rising. It can happen if there's a positive piece of news or whatever other reason. Remember, markets are highly random, but this pressure continues to mount. And then, out of nowhere, some bearish catalyst comes along, right? Oh, Russia is doing this. Oh, some other nonsense comes out, right? Elon Musk said that. And next thing you know, the stock market breaks the support, okay? That pressure has been mounting the whole time. That is how you use this. So based on where we are right now, let's take a look at a weekly, right? These are the weekly yields. So this is a lot of pressure on the stock market in general. Now, here's the thing. Yields at the moment are in a consolidation. This is not a reversal of trend, right? We have the failed high, we have a pin bar at the high, and we haven't taken out any supports yet. If I invert this chart, then we're looking at the bond prices, right? But this is the 10-year yield. This is poised to go higher. If this was a Bitcoin chart, I would be bullish. If this was a stock chart, I would be bullish. This is the bond chart. This is the rates, the yields. So if this thing continues higher, which it's poised to do, then it just puts more pressure on stocks and on Bitcoin. It also supports the dollar, okay? Let's take a look at the dollar index, okay? Now people, oh yeah, the dollar, how much higher can the dollar go? Don't go by nonsense opinions. This is, if Bitcoin looked like this, I'd be looking for pullbacks to buy, all right? But this is the dollar. And we have a bond market that's consolidating, right? Yields consolidating to go higher. That's only going to be bullish for the dollar or put bullish pressure. Again, it's not one-to-one. I can't emphasize that enough. It's not one-to-one. So it puts pressure. Now, you have some positive catalysts that come along for the dollar. You see the dollar make new highs. That's a weekly chart. Okay, again, here's the daily chart. And yeah, it's pulling back a bit, but look, you're looking for supports right there on the dollar. All right, so this has to do with the yields too. 105.78. That's what you're looking for. So this pullback on the dollar is, well, I mean, I would consider this a selling opportunity for the euro, right? To short the euro, and that maybe that the resistance on the euro, I don't even have to look at the chart. The resistance on the euro is about 103, right? So if we get up to that 103 area and we produce a sell signal, I'd be very interested in shorting the euro, right? And looking for the next low, which could be sub $1. You know, the euro was actually below $1 very briefly. All right, and that trend hasn't changed yet. We'll see what the ECB has to say on Wednesday. Anyway, so I hope that answers your question. So now you say we're first waiting for the bond market prices to go up. After that, rates. Right. So can we expect the bull run? Right. Now, so here's the thing. So let me answer that part of the question. And now let me go back to the bonds itself. Let me go back to these are the bond prices. Okay, not the yields. Now, so we're looking for the bond market to stabilize. Markets typically don't go from bearish to bullish. That's, I mean, like they call it the V recovery, unless there's an extreme force behind them. We saw that in 2020, right? The V-shaped recovery. Where did that come from? Was that just like a random occurrence? No, the Federal Reserve was behind that. They cut their rates. They were sending checks to everyone. Do you not remember that? So something like that, when you have a catalyst, when you have the most powerful government and economy in the world doing something like that, yeah, that's a pretty decent catalyst. But for these things to do it on their own, I mean, you need some serious force behind that, right? So with that being said, I would not expect such like a nice V shape on something like this. You want to see stability, and stability in the bond market will basically be sort of what we have beginning now. This could be the beginning. We have a low in place, right? Pin bar low, okay, failed low. And now it's trying to consolidate. We have a high established right here. What is that? 120.31, okay? That's the range high. Right now, that's the reference point for resistance. That's a historical resistance. If I want to get other resistance levels, I can just, draw a proportion on that, and I can find other resistance levels from there. I'm not going to go into that right here. But the point is this area is going to be an area where it can consolidate. The bonds take time to do things, right? So the bonds may consolidate for 3 to 6 months, maybe longer. And in that period, the stock market can be all over the place, right? It may go a little higher, may go a little lower. Bitcoin will probably be all over the place as well. But if the bonds fail to make new lows, then I would take that as bearish pressure is now coming off the stock market. So you can't think of this in absolutes. Like, okay, well, this equals that. It's not that simple. But I will treat it as, okay, we get another failed low in the bonds, so basically get a double bottom, then I would be anticipating the stock market, the bearish pressure on the stock market to be more relieved. Also in that situation, buying supports in the stock market, or maybe stepping up investing a little bit, right? Maybe instead of staying very small, perhaps you want to get somewhat larger, but not too large. If you're doing the dollar cost averaging in quality instruments or quality products, that would call for something like that. But at this point, it's too early. Does that make sense? Because this thing can easily make a lower low. Now, one thing I have to say is there's some information out there about the Fed and the Fed funds rate. You have to understand, markets trade in the future. They don't trade now. They trade in the future. They're 6 months ahead, basically. So things that are in the horizon now get priced in. The Fed, the Federal Reserve, is expected to raise rates by another point or whatever, 100 basis points over the next few meetings, right? That's what's expected, which means it's priced in, which means if they raise those rates, you're probably not going to see any kind of change in the market. Okay, not really bearish or bullish. Now, the thing is, if a new piece of information comes out that the market has not priced in, perhaps in one of the Fed meetings, maybe Chairman Powell comes out and says, yeah, we're going to stop cutting rates a little earlier than we expected. If he says something like that, that's not priced in. Okay, so that means the market at that moment would be mispriced, and it would have to correct itself, right? So if he came out surprisingly and said something like that, you will see an enormous rally very quickly across the S&P, the NASDAQ, Bitcoin, and the dollar will get hammered on something like that, okay? But how likely is he to do something like that? You can't forecast what he's going to do or say. I mean, the Fed usually, they have their agenda, they do what they have to do. But anyone that thinks they're going to guess what the Fed is going to do, they're just fooling you or whatever. Maybe they don't even know themselves. It's just nonsense. Unless you play golf with Chairman Powell and he tells you, yeah, I'm not gonna raise rates anymore. Don't tell anyone. Then you have inside information and you can take advantage of the market. But unless you have that information, you don't know what Chairman Powell is going to do, right? You have experts that try to forecast all this stuff all the time, like real economic experts that try to figure this out. And there may be factors in play that force the Fed to do certain things compared to other things, right? So that's how they come up with a probability. Well, the Fed is more likely to do this. Just like the bonds were pricing in the rate hikes way earlier than the rate hikes started, okay? And no one was talking about that, okay? All you had to do was watch the bond market and see what was going on, and it was pricing in something. So if the bond market stabilizes and eventually breaks resistance levels, it could be pricing in the Fed no longer raising rates or possibly cutting rates at some point. Again, we're talking like a year out, okay? Does that make sense? All right, so I hope that answers your question. Why were you emphasizing months that bonds were, okay, that was a good sign for stocks? No. Bonds rising puts, all right, so I think I answered that, right? Bonds rising puts pressure on everything, bearish pressure. Were you looking at it as a sign that the party will soon be over because government had to pay out higher yields? Well, they raise rates, right? And when yields are rising, that puts pressure on everything. Okay, when it's more expensive to borrow money, less people are going to borrow money. Less companies are going to borrow money. They can't pay Bob Schmo his raise and blah, blah, blah. And Bob Schmo is not going to put that money into an altcoin now because he doesn't have the money, right? I mean, that's eventually what it gets to. Okay, and we're not getting any more stimulus checks here that can find their way into NFTs. All right, so I hope that answers that. I answered all parts of that question. That's an important question, and people need to understand this from the economic perspective, because in bear markets, I mean, that's really where you want to educate yourself as far as economics go. In a bull market, pretty much anything goes, right? When the economy is on your side and you have an expansion where there's no inflation involved, I mean, even though prices may pull back temporarily, we saw plenty of temporary pullbacks, right? Even in stimulus mode, when they were creating the inflation, the market is still likely to be supported, right? So you can be a complete moron, a complete mindless sheep that's going to get fleeced in the future, but at that moment, you say, oh yeah, you can just hope your position's back, and they work. All those hopers are given back all that money that they made, right? So what a waste of time that was. Learn how to trade and invest in bear markets. Bull markets breed bad habits, okay? Bear markets teach you reality. And we haven't seen like a real bear market in quite some time. So you have a lot of morons out there, especially the ones with big mouths. All right. So Tesla, is that right? Okay. So let me jump over to Tesla here. Kai, good to see you. Let's see, TSLA. So you understand that Tesla is a component of the S&P. Right, and let's take a look at a weekly chart, and it's pulled back as it should. It's got a resistance area right here. What price do I have on this chart? What is that? 779 is on this chart. As you can see, what it relates to, right? Let's take a look back to the daily chart. So you have a clear resistance here in this area. This high over here is 792. You can even round that to like the 8 area. This resistance here is what, 763, right? This area here. So again, you're not looking for an exact number. You can't be precise with the market, but that's a general area, right? Look at this candle right here. This is today's candle. Market is going to close here in what, 30 minutes? This is not exactly a nice looking candle. It's not a pin bar, but it has a tail on it and it's near resistance. Certainly not a place to be buying, okay, or investing. You're looking for a test of low. Now, whenever you look at a stock, you should always look at the S&P, especially a popular market stock. What a coincidence. George, I'm long the S&P, and it doesn't look good. So here's the thing. Does that not look the same? Okay, same type of candle. Whenever you trade a stock, check the S&P. S&P's got a resistance right here. You can argue that's a triple top. What is that? 39.18, so the 39.20 area on this thing. If this thing breaks this support, most likely, what is this support, by the way? This is 37.20. If that breaks, you're looking at, Tesla is probably going to break its support too. And then you're looking at test of low. Okay. In this scenario that I'm pointing out right here, what is the swing low is 36.36. So basically at 36 quarter area, something like that. If we get a test of low, chances are Bitcoin will do a similar thing. So all these clowns that keep calling for these ridiculous rally, blah, 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 this needs to rally. This is a lower high, just like Bitcoin. Okay, this lower high happens to coincide with this previous support. That's market structure. I don't argue with market structure. Okay, maybe you do, but I don't. So as long as that structure stays intact, this is bearish. But people can argue, oh, but there's a higher low over here. That's a reversal. Not if the resistances are still intact. If that resistance is cleared, which, hey, maybe a good report comes out, right? Maybe Amazon or whatever, someone comes out, and maybe you get something like that over the next week or two. Okay, it takes a while. The S&P is a big product, so it takes a while for it to move. So let's say you get something like that. That would be a change, a notable change. Okay, and at that point, that's not going to turn me bullish, but that's going to turn me neutral or possibly range bound. All right, like, okay, if we break that resistance, where is the next support, and do we hold it? Right? Do we test it and hold it? And those answers can provide trade opportunities. Right? The market has to answer those questions, not you. The market. So you have to look to the market for those questions to be answered. It's a passive mindset. For those of you that are assertive and that think that, this is the kind of arena to make things happen, you're going to donate all of your money to the market. Okay? This is a passive mindset. This is not sales, or I'm just going to make more phone calls and I'll make more money. It doesn't work that way here. Okay? So understand that. A lot of people go into this with the wrong mindset. Right from the start, you can't win. Okay? Especially on top of the layers of deception and layers of human emotion, the emotional complexity. There's so much working against you that any winnings that you have are temporary and random, and most people aren't going to recognize that. Okay, even though I tell them. All right, so that's Tesla. Does that make sense? So even though I showed you the Tesla chart, use the S&P. All right, Eligius, AT&T. All right, let's take a look. Here's an old market stock. So let's take a look at the weekly chart. What's the story with this nonsense? So I want to see the bigger picture first, right? On the weekly. Next thing I want to look at are levels. So what do we have here? We have an old support. Okay, it's tested it as a resistance. Now look at this. It's broken somewhat, but it gave you a double top right there. This area, while it is somewhat interesting, it's still in the general vicinity. Okay, now keep in mind, AT&T is generally a market stock. It's not going to, if the S&P can't rally, I don't care how great their numbers are, it's not going very far. Maybe, if the S&P pulls back, if this has some good things going on fundamentally, which I don't know, I'm not familiar with, perhaps this won't get hammered as badly as everything else if it has some relative strength. Okay, that's a possibility. So you have a potential consolidation. I would not be going long this, at least not as a swing trade, not at these levels. As far as investing goes, I mean, there's not, like I always say, there's never a bad time to invest. It's really the size, right? There's a bad size to invest. And you certainly don't want to be getting heavy or aggressive at these levels. If you want to dollar cost average, consider like a midpoint. Again, I'm always against often buying in the midpoint of a range, but if it's an investment, it's not the same thing. Okay, you have to understand that investing and swing trades are very, very they're not the same at all. I'm actually going to cover that in my webinar. But the point is, so if you're looking for a swing trade, then wait for the range low, because now why not the midpoint for a swing trade? Well, for one, midpoints are highly random. And for swing trades, you want to isolate. You want to get away from the random nature. You don't want to have something that's 50-50 typically. Okay, if you do take a trade there based on a signal, understand that the chances of follow through are lower. Your reward risk and chances of follow through are much better in this range here. Okay, the range low. Why should this thing even test the range low? Well, if we have weakness in the S&P, right? I mean, this is a Dow stock, right? New York Stock Exchange. Most likely this is a Dow stock. I don't know exactly, but these things are more likely to test their lower ranges. Even if the S&P breaks lows, this thing may not make new lows, but it can test a lower range, and structure favors test of lows on the S&P. Okay, so that's how I would treat something like AT&T. Wait for this area here. Look, you're not missing out on anything. Okay, if for some reason it breaks these resistances, I don't know. I would be very suspect unless the S&P is changing its story. And in order for the S&P to change its story, you need the bond market to change its story, and that just hasn't been confirmed yet. Okay, the bond market, like I showed before, it all goes back to the bonds. It may be putting in a consolidation, it may be putting in a bottom, but it's too early to make any type of judgments. Like, okay, bond market bottom is in, I'm going to start buying. It's too early for that. A lot of things can change between now and the next 3 to 5 months, as far as interest rates, as far as government power and control, monetary policy, some event that no one was expecting, right? So you have to be prepared for those things. If you're going to take risk, don't take risk from unattractive levels, at least. Okay. Anyway, does that make sense? So let's move along here. Okay, Kai is telling you how interest rates work. Okay, no problem. Also, bonds usually lead risk assets. That's true. Bonds, everything begins with the bonds, right? Because interest rates make money cheap, or they can make money cheap. If you have a lot of cheap money floating around, that money finds its way into markets. And that's why speculative assets like garbage altcoins do well, even though they produce no value. People pour their money into them because they're high growth assets. Those do well in speculative and highly inflationary environments, like when you have Fed stimulus. Okay. All right. So, hey, Peter, gold. So gold, speaking of inflationary, right? Gold got hammered. Let's take a look. And I was warning about gold. Do you guys remember? You guys remember? I was saying, don't buy gold. Don't buy gold. Stay away from gold. Why was I saying that? The dollar looked like an altcoin. The dollar was vertical. Why would you buy gold in the face of a strong dollar? Well, people said to me, well, there's global inflation. The dollar is just going higher because other currencies are going lower, but they're all still bad. See the price of gold now. Okay? Don't buy gold in the face of a rising dollar and a Federal Reserve that's hawkish. Okay? Gold, just like Bitcoin, is getting hammered on that dollar strength. All right, and this is no surprise. Anyway, so that's the rant side of it. Let's look at levels. So the structure, bigger. Let me go back to the weekly. This is an very old trade, by the way, that got stopped out. The weekly chart on gold is interesting because if you really zoom out, this is not exactly bearish when you go all the way back a few years, right? It's a consolidation, more likely a range, a wave 4 consolidation. I've talked about that with gold, and you're at the low range, right? You're the lower part of the range. So it's an interesting location for gold if you're a long-term bull. And if things change, right, this would be certainly a good place for things to change. But economically, we don't have any changes just yet. So although it's an attractive level, I mean, if you're going to play the long-term gold game, certainly don't do it with CFDs because you have to pay interest or swaps often on those, right? These Forex brokers, they don't want you making money. The money comes out of their pocket, so they charge you interest. It's not worth it to hold long-term positions with these CFD, complete nonsense. So you buy physical gold, right, or physical silver if you want to play that game because there's no leverage and you're not paying interest on it. Okay, so these are certainly attractive prices for that game, but just understand, if the dollar continues to rise, this thing is not likely to do anything magical anytime soon, okay? No matter what the conspiracy theorists say, you have this resistance up here, which is clearly intact, all right? And I would be anticipating If there's any bounce in gold, which, again, you can get a bounce, you're looking at this old support, okay, which can act as a new resistance, the low 1800 area. That's your next resistance. So if you're an aggressive swing trader and you're interested in a potential swing trade, right, you're going against the bigger picture, chances of follow through, right, are low. So sure, theoretically, it can get up to the 1800 area. That's a pretty good trade, but it can turn. Chances favor a turn much sooner. So, I mean, you have to babysit it. For me, it's just not worth it. I mean, I'd rather go with something that will work for me, right, not against me, unless you have a lot of time in the day and you can babysit these things. Like I said, at this moment, there's no buy signal in gold. Okay, you have a pin bar, which appeared, what was this, Friday? Let me open this chart up a little bit, right, so we can take a look. That's actually not a pin bar because there's an upper tail. That's not a pin bar. So, I mean, this is an inside bar. You can argue that this is a buy signal that occurred earlier today, but this is not how a buy signal should close. That is a bearish pin bar. Now, so what do? I mean, do you short a bearish pin bar into a support? Bad idea also. It's possible to have high risk on both sides and take no trade. So, I mean, I wouldn't short this, although structure still favors lower prices. If you're going to short gold, right, that's something that you consider with the CFD because it's very short term. You're in it maybe a couple of days, maybe a week. Even if you have to pay a little interest, it's no big deal. But these would be the levels, okay, up in this area. What is this area here? 17 half, like this area here, or 18. Those would be the areas to be looking for a short-term aggressive swing trade short. Otherwise, long-term for longs, it's too early in my opinion. And there's this buy signal. If you happen to buy some at this buy signal, if it's a CFD, I mean, be prepared to take the loss or get out now, take the loss, right? I mean, again, this game is about mitigating risk, not chasing profits. If you're still lured by chasing profits, you have a greed problem, okay? Anyway, not you, Peter. You know what I'm saying? I'm talking to everyone in general. All right, so I hope that answers your question about gold. Remember, gold is a big economic component. So when you have changes in interest rates and you have inflationary blah, 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 it can move gold because gold is an inflation hedge like Bitcoin, right? So it's just something to keep in mind when you're dealing with gold. You can look at gold long-term. You can look at gold short-term. You have to decide which magnitude you're considering because that's going to shape the remainder of your trade idea and how you're going to gauge risk, okay? Hey, Wedge. So let's see. What does Bill have to say here? Shark. Oh, okay, nice. Yeah, all right, sharks. Well, I mean, that's cool. Hope you're not hanging out in those shark tanks. All right, can't open the link, Peter says. Okay. Are you talking about the Peter may be talking about the my webinar link? That should be the link. Maybe it's being blocked or something. I know European, because of like European privacy laws, some people have a hard time getting to that link, and it may have something to do with that. I don't know. Let me see if I have any other complaints. Anyone else click on my link? Maybe I shared the link wrong. I'll have to share it again, but thank you for letting me know that, Peter. Let's see what anyone else says about it. Hey, James. Okay, no problem. Winter. All right, so I said hello. So we have a hi there. Okay, Gabriel. Ethereum. Yeah, let's take a look. So here's the thing. As you know, Ethereum follows Bitcoin, right? So whatever I said about Bitcoin is typically going to be reflected in Ethereum as well. So whenever Ethereum does something like this, you have all the Ethereum morons coming out, and they're going to be Ethereum back to 5K, Ethereum back to 10K, nonsense, nonsense, nonsense. Okay, please don't get suckered into that kind of garbage. Wherever Bitcoin goes, this is going, right? Bitcoin structure hasn't changed. Now, Ethereum tends to be a little more wild, right? A little more exaggerated than Bitcoin. Maybe because it's a cheaper price. I don't know. Or maybe because the availability of coins or the order flow makes it more wild. I don't know why it's more wild, but it tends to be. So here's the thing. Yes, this looks bullish right here. It has taken out this lower high resistance, but this resistance is a minor one. That's not a major resistance, okay? You have another resistance right here, this old support. This support is pretty significant. Why? Because when it broke, a lot of people got hammered. Okay, there was a lot of hammering after it broke. So that gives it more weight if it gets retested, right? So that level right there, which is 1720, so I guess you could say mid 17s, right? It may test that area possibly. Currently, you can argue that this current area right here is equivalent to Bitcoin in the 22Ks, something like that, right? So if Ethereum works its way a little higher, maybe Bitcoin is working its way up toward 23, and that could lead to something like that. But just keep in mind, let's take a look at the weekly chart. These movements on Ethereum are only short term. They don't change the larger structure. There is plenty of opportunity here for another lower high to develop. Look at this area up in here. What area is this? That is the, okay, so 2159 is that low. This is the 2000 area, okay? Whole number, 2000 area. Again, you can't just focus on just one particular price. It's usually a range, right? An area. That area is still a potential lower high area. I mean, look at this up here, right? We had this break. This is a weekly chart. We had this break and it only led to a lower high. So how many fools bought into this breakout thinking, you know, following the fake guru train, thinking that Ethereum, this is the next leg higher and non blah, 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 blah. And it was the beginning of the next leg lower. Okay. So all I'm doing is I'm pointing out warnings. I can't forecast. I don't know where these things are going. All I can look at is the structure and the environment. And the structure and environment still favor lower prices, or at least test of lows, right? So that's what is more reasonable to anticipate in this environment. If there's a change, then we adjust. But this is not a change. It's still too early to judge this. This is, in fact, like I said, it's a resistance area. So I'd be looking for a sell signal here. Okay, so if you're looking to buy, this is a high risk area for longs, for swing trade longs. If you're looking for a short, I would wait for a bearish pin bar, or I'm not, it's not a pin bar, an inside bar. Doesn't matter the color, inside bar, or perhaps a bearish pin bar, like up in here in this area. Those would be sell signals if those lows of those candles get taken out. Does that make sense? Also, I would be expecting Bitcoin to be showing me a similar look. If you take such a trade idea, again, I don't want people to be confused and think I'm making forecasts, because I don't pretend to know more than the market. Anyone that comes up with an absolute forecast, anyone that says, well, Ethereum is going to be, pushing this low by next week, I can almost guarantee it. Or, oh, Ethereum will be, 3,000 whatever in just a couple of weeks. Just trust me, it'll get there. Anyone that says that is implying that they know more than the market. No one knows more than the market. Okay, so please, again, I have to remind people of that, because it's amazing to me how many people still get lured into that nonsense. I mean, I watch these fake gurus with enormous followers, enormous number of followers, because they tell people what they want to hear and they fill people with hope. I don't do any of that. I don't fill people with hope. I introduce people to reality. Reality is not pleasant, okay, especially in this game. So if anyone's pushing you on hope and all that kind of stuff, your results are not going to improve. I can almost promise you that. They may improve temporarily, but it will catch up to you, okay? The reality will catch up. You're better off being familiar with reality, because it helps you protect your capital. And that should be your number one priority, okay? All right, so that's Ethereum. Stian. All right, south of France. Did you move or something? Could you have a look at CHZ? Yes, CHZ. You, Stian, a long-time student. Okay, so let's take a look here. Let's first start with the weekly, and let's see what we have here. So, weekly chart. Now, obviously, this is an altcoin. Look at this thing. A lot of people got caught in this one. I mean, most altcoins. So look at this attempt, right? This is like a bullish attempt here. You haven't taken out any important resistance levels. This is your first important resistance at 14 cents, right? This thing right now is at just about, what, 11 cents there? 14 cents is your first area. So this is, at this point, especially in the face of a not so strong Bitcoin, right, structurally, this thing is likely to produce a lower high. So I wouldn't be bullish on this thing just yet. If you're looking for longs, the conservative thing to do would be to wait for this resistance to break. Now, when it comes to altcoins, understand something. Like anything else, like I said before, it's never a bad time to invest. Altcoins offer price appreciation potential, right? I mean, that's the thing, but the environment needs to facilitate that. We're not in that environment yet. So altcoins are still likely to suffer. I don't care how great their white paper is and all that other nonsense. We've talked about that before. None of that means anything. Okay. What matters is what's going to invite money into the system and where is that money going to go? Okay. Often money is attracted when a lot of cheap money is coming in, it wants growth. Right, so it goes after these high growth, or maybe some marketing group somewhere starts some hype on something, right? And they all jump into something like Solana or whatever, Cardano, whatever that nonsense, and they get like a herd mentality going, and money will start chasing stuff like that. But we are not in that type of environment. So if you want to invest in these things, I would say it's extremely speculative. Keep your investment size very low and be prepared for lower prices. That's all I can tell you. You know, at some point, the cycle will change and cheaper money will come back to the market at some point, right? But here's the thing to keep in mind. When that cheap money comes back, yeah, sure, it will find its way into the entire altcoin space, but some altcoins will do better than others. Which ones? Well, there's no way to know. You're playing a random game, because in each cycle, I've seen 2 cycles so far with these altcoins, okay? The first cycle, the group that had the big numbers, blah, 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 was not the same group in the second cycle, right? So you have new coins that come along, new hype that comes along, blah, 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 blah. You don't know which ones. So just something to keep in mind. A lot of times they all break out together, but then some of them start breaking off on their own, okay? And I mean, how do you find those? You're tracking them, right? You're tracking them day to day. Ones that have a major resistance break or that have a higher rate of momentum, perhaps, you know, that would be attractive. Or if you're part of their social groups, right, and they're doing all these things to promote the coin, and you're seeing that group grow quickly, and they're giving free coins away and whatever, that kind of stuff. That's usually maybe where you can get some sort of information, but you have to spend a lot of time searching and going through these groups. I mean, they're really full of a lot of morons. So you have to have a lot of patience and see through a lot of the nonsense. Anyway, but I'd rather, you know, what I'd rather do is, if I was going to play that game, again, take a look at things like what's that thing called, where they look at the Bitcoin. What the hell is it called? Let me think of the name of it. It's the group together. Let me see. Is it this one? No, they have like an index where they're together, and I can't think of the name of it right now. But why can't I remember? Anyway, you find that group, and that's where you can usually see, and the chart looks exactly like Bitcoin, and that's where you'll see the money flow start to change. Okay, Kai told me the name. I can't think of it right now. I should be able to remember these things. All right, anyway, that's CHZ. I hope that helps. Okay, Jan, just from TradingView. I don't mind where I should. Okay, great. Okay, cool. I appreciate that, Jan. All right. Okay, Dave. Hey, David from Miami. All right, cool. So I went over Ethereum. From Turkey. Hey, Levant from Turkey. Levent, welcome. I've seen you before. Thanks for stopping by again. Gabriel from France. Okay. Bonjour. Arman. Hey, Arman from South Africa. See, I remember. All right, Andre. Please take a look at MES. MES? Are you talking about the futures? What is MES? Let me know, and I'll go over that. If you're talking about the S&P micro futures, you don't need to look at that, actually. If you're looking for analysis, you can actually use the CFD. The number is slightly off, but it's the same thing generally. But let me know. Just be more specific. Vanessa's, all right, hey, nice to see you. Thanks for stopping by. Birak, another student. All right, cool. How are you? Be great if you could throw in a day trade once in a while. Not throwing in day trades. Okay, here's why. I appreciate you asking, but here's why. Day trades are very, very hard to manage. Okay, number one, you need to they require a lot of babysitting and a lot of attention, and things change really fast on a day trade time frame. And I can't, if I give out a day trade, I don't want people getting caught and losing money, because in a higher frequency of trades, your chances of being wrong are greater. Okay, so this is what will happen. I call a trade or two or three, and they may be wrong, right? Meaning they're going to lose money, and then people don't get out of them. All right, and you say, well, but I'm more nimble than that. You may be, but there are beginners that they're going to sit in it and they go, oh, I'll just give it a chance, and then that day trade becomes a swing trade, and the day trade loss becomes a swing trade loss. That's why I don't call day trades. I just don't have the resources to stay on top of that and all that. That's why I stick to swing trades. All right. If we limit the noise, 25,500 is possible. Okay. I guess you're talking about Bitcoin. I mean, it's like I said, I maintain an open mind. The 25K area Bitcoin is possible. But if I'm going to assign a probability to it, I would still say it's a lower probability until we have to clear that 22K, 22 to 24. We have to clear that, or I need to see like a very powerful candle. We're not there yet. Okay. Waiting for Thursday. Hello from Belgium. Thursday, you mean Wednesday. If you're talking about the webinar, it's on Wednesday. Okay. Don't worry. I'm going to send you a reminder if you're registered. Erhan from Turkey. I got my Turkish followers. All right. It used to be Romania, but now I'm popular in Turkey. Okay, that's cool. I've been to Istanbul, by the way. All right. Take a look at. All right. So MES1. So you are talking about the futures. All right, Andre. So here's the thing. This is what you can use this. All right. SPX USD. It's basically the same. All right. The micro futures. I mean, if you're going to chart that, you can actually use the intraday charts for this as well. The chart is going to look the same, okay? Just the price is not going to be exactly the same because the CFD is priced a little differently, but it's the same chart, okay? You just have to translate the two. I've done that a lot. I follow the S&P very closely. So here's the thing. Like I said before, you're coming off this level here. Today's high, 39.06. So clearly 39 is a resistance. Not a good place to be buying the S&P. If this thing takes out today's low tomorrow, which is 38.17, you can probably translate that to 38 even on the MES, right? Then you're looking for a test of this low. Like I said before, you have to take out today's low though. So that's 37.20. So I mean, you're looking at like a good 70-point move, something like that, and that would be a good place. I mean, if you're looking for like an intraday swing trade, I guess you could still call that a day trade. I mean, that's a possibility. It's very hard to play that game because there's so much movement. It's not like it breaks the support and goes straight there. There's a lot of noise in between, and it can be very tricky. It may retest your entry, get you out, and then turn around and work its way there. And by the close of the day, it's where you wanted to get out. Anyway, very hard game to play. But if you're looking for a multi-day, then if it breaks that low, I mean, I'd be anticipating, a leg lower or a couple of bars lower into that next minor support. Does that make sense? Again, we have a couple of economic reports that can lend a hand to that type of price action this week. Also, there are stocks that are reporting their numbers. You get a big stock that comes out with a poor guidance, you may get that S&P type of move. The structure favors that move. Does that make sense? Okay, so that's your S&P. I never got when you publish articles. Oh, Vanessa's. Yeah, I'm not sure. That's other people have complained about that. That's something with TradingView. Maybe it's going to your spam folder or something. I don't know. But you're not the first to complain about that. So maybe you want to contact TradingView. I know it may be like a waste of time. They may not get back to you. I don't know. But yeah, I've heard that before. So I apologize for that. What are your resources for good information regarding macroeconomic information? Good question, Jan. So, I mean, I look at the bond chart primarily. I don't really look at anything else. I pay attention to Fed announcements. I don't read them. I don't look at their press release. I don't look at any of that stuff. I'm just relying on price and the structure of the bond market. That's what I'm relying on. On occasion, I may check like a YouTube video, or there are certain professionals, industry professionals that I would maybe check out real quick, but often their views are very similar to mine, so I don't have to spend much time watching their stuff. Okay. Again, these aren't cowards that hide behind a pseudonym. These are professionals, who they sell. I mean, I guess you could say they're a competitor. I can consider them a competitor, a bigger competitor, right? Much bigger than me, but they're professionals, and I know that for a fact. And they've been in this game as about the same time or longer than me. So that's usually where I look, but I don't depend on that information. I depend on the bond market. Okay, that's where I look for confirmation. Of course, the S&P as well. All right, I am into Ethereum, but it looks like at Matic. But let's look at Matic. Okay, Matic. All right, let's take a look. Matic, USDT. So, Matic, USD. Okay, there we go. Interesting. So let's take a look at the weekly chart. So again, in this environment, right, you're going to have these situations. Not all these altcoins do the same thing, right? Maybe Matic has some hype going on in it. Very common with these. It's not hard to get a large group together and start hyping to them. We've seen that, many examples of that. So this is a weekly chart, and that's a nice move. Okay, that's a nice move, but not time to buy now. If you're not in this, there's no reason to buy. This is a place to get out, to reduce risk, not assume risk. Let's go to the daily chart. So, I mean, if Bitcoin were to produce a candle that looked like this, and that candle took out 22K, right? And the top of that candle was like 23K or something like that, that would catch my attention. But this isn't Bitcoin, number one. Number two, it still has this resistance range to take out. What's this thing going to do if Bitcoin pulls back? Okay, if Bitcoin starts breaking supports, these things don't trade on their own. As much as they try to, they still don't. So I would not give this I would not really give this any weight. It's, great place to unload if you have some. Otherwise, if you're looking to get into some, maybe this thing is, for some reason, maybe it's ahead of everything else if things are turning. I highly doubt it, but who knows, right? We have to keep an open mind. If that's the case, and you want to be aggressive, right, with swing trades, you'd be looking for this old resistance, right, which is a new support, 62 cents, this area right here. That would be a place for aggressive swing trade longs if it can produce a buy signal in that area. So you have your level now, you can prepare for that. The thing is, if the environment doesn't improve, right, this thing is likely to test this support. If the environment does not improve, the support is likely to break. So keep that in mind. If you want to be an aggressive trader and you want to go for that and see maybe if you get another leg higher and test of resistance off of something like that, that can make for a decent swing trade. Again, it's going to require a lot of babysitting, because if you're not in such of a supportive environment, this thing can easily just senselessly break. Okay, again, because there's nothing supporting these things. If this is hype, if this is chat room hype supporting this, or whatever, some other kind of nonsense supporting it, then these are very temporary. A lot of people get fooled into this. They think, oh, this thing is going to be the next Bitcoin. What's today's price? 89 cents. This thing is going to go to $5. I mean, look at this, because they're assuming that the same rate of change, but there's no environment to support that. Okay, if I saw something like this in a highly inflationary environment, meaning there's no Fed fighting inflation and all that other kind of stuff, then this pullback would have a very high probability. All right, even a tighter pullback would make more sense, right? You get like a tighter pullback, but not in this environment. Does that make sense? So how you manage this is going to depend on your risk tolerance. Are you, if you're very aggressive, like buying here is just not very effective. Okay, I don't want to say bad words, but buying here is just not a good idea. Okay, if you're very aggressive, at least wait for a pullback of some kind. All right, so at least you have the reward risk somewhat in your favor. Does that make sense? Okay, so that's Matic. Thanks for bringing that up, because I don't watch Matic very closely. Okay, are you referring to Dash when you talk about other YouTuber? No, I'm not. I talk about YouTubers just in general often, but no, I'm not referring to Dash. So thanks for mentioning. Okay, hey, go forth. How are you? We can't thank you enough for your awesome content analysis. Moon Boys, I really upset about your entrevue. Okay, how dare you become bearish at resistance? Okay, I'm not. Maybe you're joking there. Sometimes it's hard to see through the context. Jen, S&P is a huge descending bearish triangle. What is your opinion in general? So I went over the S&P a couple of times, and I'm generally bearish on the S&P. Okay, until environmentally, price structure, I'm still bearish on the S&P, which means bearish for stocks, bearish for Bitcoin, because the S&P is the king basically, right? And these other instruments have a hard time fighting the S&P when the S&P goes one way. So I'm still bearish on the S&P, and the economic environment still points that way. Like I said earlier, we could be in a transition, but it's still way too early to tell. If I get a transition, or if I get signs that start to confirm that we're in a transition, I'll be more than happy to start changing my outlook. Okay, I don't think in absolutes. It's very important to understand that. To have a trader mindset, you have to have a very open mind all the time and be prepared for anything, okay? And not ask why. I accept the market for what it wants to do and how it wants to do it, because the market always knows more than me, no matter what I think, okay? We can't, okay. Moon Boys, yeah, I don't know. How dare you become bearish? Okay, I read that one. Luthando, I have never seen you talking about MA200. How do okay, good question. So the 200 period moving average. Retail gimmick nonsense. All moving averages. Understand, there's a reason why I don't talk about moving averages or the 200 period. Now, the 200 period moving average is like your typical retail trader. Like I said, people focus on it and they say, well, if we're above it, it means this. If we're below, it means that. It's just tracking something over 200 days price. If price is above a 200 period moving average on a daily chart, sure, that implies some kind of, well, it's stronger than its 200-day moving average, but it doesn't mean it won't go back and retest it and break it. Don't base trade decisions, unless you're on a very small time frame. Don't base trade decisions on that. It's a tool that lags the market, and trust me, I've worked with it. I've worked with moving averages. They look great after the fact. They look great in trends, but when markets consolidate, you will give back anything you made anyway. Okay, so that's why I don't talk about it. And you certainly cannot formulate long-term opinions based on a moving average, which is looking in the rearview mirror. All right, greeting from Milan. Okay, buongiorno. No, buonasera in Milan. Chris Moore. All right, nice Italian name there. Okay, cool. Hey, thanks for stopping by. What will happen to gold? All right, so I talked about gold earlier. Gold is still bearish, and maybe it changes, but in order for gold to sustain a rally, like I said, and change, same with Bitcoin, we need some significant economic changes, and they're just not there yet. But they could be at their beginning stage. We don't know. Okay, it takes a few months for this to play out. Maybe in a few months we'll have a more accurate picture of the bond market, meaning the bond market will have a more precise structure developed, and then we can base some potential scenarios on that, and more importantly, measure risk. Okay, and get some sort of gauge of broader economic risk. Okay. Tempted to take some inventory. So Jesse, again, like I said with gold, if you're going to do it, look, gold's at those are good prices for gold. I'm not going to say they're bad prices, but just understand the risk you face. And if you're going to do it physical. Okay. Buy gold bars. Why? You're not using leverage. And, so if you buy your gold bar for $1,700 or whatever, and gold goes to $1,600, so your gold bar is worth $100 less. Right? Not $5,000 less because you used leverage. Okay. So there's nothing wrong with accumulating some inventory. Just realize we are in an anti-inflationary environment. Sure, economic numbers keep coming out that point to inflation, but understand that the Fed is on top of it. So if the Fed is fighting it, then inflation, even though it could be at 15%, whatever they say it is right now, it's priced in that inflation will come off in the next year. It's not going to continue at 15%. It's going to come off because the Fed is taking the proper steps, right? So as long as that's the perception, gold, there's no reason for gold to rally. So understand that gold may have bounces, but you're not going to see gold 2,000 or 5,000 or anything like that anytime soon until we have a more inflationary environment. Okay, does that make sense? Oh, Stian. Okay, thanks, Stian. I'm gonna put my webinar link in there again because I must have put in the wrong link. So for people that are interested in the webinar, let me type that in. Okay, let me see here. Let me just type that in again. That should be the link. Here, try that. Hopefully that works. If that doesn't work, I have to look into it, but that should be it, unless I'm typing something wrong. I have all the capital letters, right? Okay, anyway, thank you for letting me know. I'm putting the wrong link in the chat. But I have sent out an email, an invite a little while back. If you got that email, go to your email. Some of those emails go to spam. Check your spam folder. I sent that invite, when was that? Tuesday and Wednesday of the previous week. So just check that. I'd like you to come to the webinar, for those of you that would like to come. Okay, let me see here. Well, okay, I'm just going back here because I skipped some total. That's it, total. I'm just going. I skipped a bunch of questions here. I'm just going back. Okay, Stian. Okay, Stian. So thanks for letting me know that. Freeloader, found you here instead of no. Right. Freeloader. Thanks for joining me here. Like I explained earlier, not doing trading view today. Can you take a look at cost? Sure. Yeah, because you're like one of the 8 people that show up on trading view, and I can't spend I can't spend that kind of time that it takes for me to prepare to only get like a couple of people to show up over there. So that's why I'm here. I'll be back on trading view though. All right, so let's take a look at the weekly. This is Costco, which is I guess like the Walmart competitor, whatever you want to call them. So here's the thing. Look at this chart. I mean, generally it's a long-term bullish chart, right? Pulls back and look where we are now. So this is not that's a weekly bearish pin bar. We're still at the beginning of the week. So this candle has the entire week to change, right? But that's a lower high, possibly developing. This is also a head and shoulders formation. I don't sit there and take trades just because a potential head and shoulders is forming, but I'll note it. Okay, I'll keep it in mind that it's a possibility. So let's look at the daily chart here. You're more interested in support and resistance levels. That's right there. That's a resistance, and you have a resistance here. Now, again, Costco is going to follow the S&P. It's not going to escape the S&P. And although the S&P has generally sold off in recent time, this thing has outperformed. It's done a little bit better than the S&P. Now, every time the S&P pulls back, right, you get these little pullbacks and it continues higher. But you're right into a resistance area here. So certainly you have some conflict where this is a bullish structure, but it's a bullish structure going into a resistance. So understand that this is not a place for longs right now. But the stock is trying to act relatively strong. Now, let's go back to the S&P for a moment because you have to always look at the S&P. The S&P is not as strong. The S&P has that lower high in place. If the lower low comes in the S&P, then cost is likely to start breaking these supports. Okay, so if you're interested in a long, this is not the place. At least consider the long at one of these supports, but keep your eye on the S&P. If the S&P clears, that 3,700, whatever that number was we looked at earlier, then I would not be very expectant of these supports. They're probably not going to hold. Now, if this stock is going to act relatively strong to the S&P, which is always a possibility, then maybe the lower supports will give you a better chance of staying, above, staying stable, meaning possible double bottom in Costco, or maybe you get a higher low around here somewhere, which also be basically another double bottom around that 443 area. So those, considering that the S&P is still generally bearish, those are areas that I would be looking for if you're interested in swing trades. Even if you're interested in investing, because obviously this is no garbage stock. I think you could still get better prices. Okay, again, you're at a resistance. You're looking at an S&P that's poised to pull back. If you're going to dollar cost average, give it a chance to test one of these supports at least. Okay, and again, it doesn't hurt to be small. And if you start getting even better prices, right, you can add a little bit more. When it comes to dollar cost averaging, I like to think of more of a schedule than, I'm going to buy, $1,000 worth today, and then in a week I'll buy another $1,500. No, think of, okay, I'm going to invest, $5,000 over a 5-month period. That's $1,000 per month. On the first of every month, no matter what the price, I put the money in. That's a dollar cost averaging schedule. You're not really worried about the price. You're more worried about the size, right? The size helps you protect yourself. If Costco, for whatever reason, breaks all these supports, which again, anything's possible, right? If the S&P has some kind of dramatic move, well, then you don't have to. You can skip 1 month, or you could wait to the midpoint of the month and see if there's some more stability there. It gives you a lot of flexibility instead of throwing all 5K in and watching it get cut in half, okay, in a couple of months. Does that make sense? So again, look, while I'm short-term bearish, it doesn't mean that the market is just going to keep being bearish and going bearish. At some point, the cycle will change, but that point, there's no way to know where that point will be. I need to see confirmation, and I need to see the economic environment start to be more friendly. It's not there yet, like I keep saying, okay? So maybe aggressive traders want to start accumulating some inventory now across the board. Hey, we're not at bad prices on some of these things. So keep that in mind. Always keep the risk in perspective. That's the number one thing you should do, no matter what. When you're taking a position, whether it's a dollar cost average or whether it's a swing trade, ask yourself, how much pain am I facing here if this thing is going to go the wrong way? How much pain am I looking at? And can I take it? How am I going to, or am I going to be like, I can't take that kind of pain? If that's your first thought, I can't take that kind of pain, then your position is too big before you even get in. That's what you should be thinking. You invest 20K and in a month it could be at 10K. Can you handle that? No, I can't handle it. Then you shouldn't be taking a position that's going to put you in that type of scenario. Think of the pain first, because we're in that type of environment. This is not an easy, mindless hope environment where the Fed is stimulating everything. Okay. All right. Bitcoin. All right. So I went over at BTCD. Is that the dominance? Yeah. I have to cut this off here soon. So I'm going to skip that one, Vanessa. So I'm sorry. If that's the dominance, those charts are just an unnecessary layer of complexity. I never use them. People have asked me about those before. I can get my information from the Bitcoin price. I don't need to know dominance. It doesn't matter. If Bitcoin's breaking lower, it doesn't matter what the dominance is. If Bitcoin starts breaking resistances, it doesn't matter what the dominance is. Price knows everything, okay? Price knows, and it factors in all the known information in the world. Bitcoin dominance is part of that information. So I go by price. All right, so I hope that answers your question. Wall Street bets. Yeah, Kai, I mean, they had a nice little thing going, but that was also doing a very stimulative and mindless environment. Total, yes, wedge, right, total. So before, that was when I was talking about the Bitcoin, when you're looking at basically the money flow, this total, Kai originally pointed this out. And I mean, it looks just like the Bitcoin chart, but this is the money, the capitalization that's flowing into or out of. And as long as this looks like generally like this, but I think total is a good place to look. And of course, the Bitcoin chart will look exactly the same. That's a good place to look when you're considering, has the general trend, is it changing for these altcoins? That's a better time to invest. Now, keep in mind, most likely you're not going to get the bottom. The bottom needs to be in first. People don't understand this, okay? If this is the bottom of total, or let's just go to Bitcoin, okay? Because again, people think, I'm gonna buy the bottom. Okay, but that's the same as gambling, right? If this is the bottom of Bitcoin, which it's possible, we do have a higher low, right? We do have a higher low that's established. The bottom will only be known after the fact. Okay, so at this time, it's a possible bottom, but there's no way to know. Structure hasn't changed. So as long as resistances stay intact, I suspect that the bottom will be tested again, and structure favors a break. That's why I'm not optimistic at all, not yet. When I see those changes, I will adjust. Okay, because like I said before, I listen to price, I listen to the market. I don't listen to people. Okay. Let me see what else we got here. Stian, is it a brave new coin? I'm not sure what you mean there. Kai, you meant quarterly reports. Yes, Kai, thank you. You see, when I can't remember, I have Kai, I have Bill. I have a lot of things on my mind sometimes. And I usually have a good memory. Okay, but sometimes I can't remember. Thank you, Kai. Yes, so I meant quarterly reports. That's what I meant. Think some important ones this week, right? Tesla, that's a big one. Netflix, part of the FANG complex, right? So those type of quarterly reports can affect the S&P. And if they affect the S&P, they're pretty much affecting everything. And Bitcoin can be part of that. And you mean, well, what does Netflix have to do with Bitcoin? Nothing. But Bitcoin is basically, I like to think of Bitcoin as a component of the S&P. S&P gets hammered, it's certainly not going to be a positive for Bitcoin, okay? I saw somewhere one explanation, which again, I don't care about explanations, but one explanation was if stock investors have less money, then there's less of a reason for Bitcoin investors to invest because, you know, it's a lot of the same people. I guess logically it makes sense, but I'm not going to do anything with that information. I don't care. So go forth. I love market analysis, but I'm here mainly for the Seinfeld impressions. Go forth. I haven't done enough of those. But I love Seinfeld, and I know I sound nothing like him. Some people don't like those impressions. They give me a hard time. But, you know, how can you go wrong with Seinfeld? Anyway, I got to work on some more, though. So thanks for mentioning that. I appreciate that. Levent, some people pretend as they know the major players. There's stops and profit levels. Can a major player do what they want with the price of Bitcoin? Good question. In fact, you know, someone actually accused me of being a manipulator of Bitcoin. I mean, I had to laugh. That's pretty comical. I wish I could manipulate Bitcoin. I'd be like, yeah, Bitcoin's a short. I mean, manipulate it now so I can look right. Are you kidding me? Okay, now call Chairman Jerome Powell. You can call him a manipulator of Bitcoin because if he says something, he can move global markets. Elon Musk, if he says something or tweets something, he can move global markets if he wants to. It's not ethical, but he can do it. Those guys, yes, not me. So anyway, some people pretend as they know major players. There's stops and the profit levels. I don't know how you're going to know that because that type of information is extremely private. You know, if you work for a market making firm, or maybe you work for a large broker that those large players are maybe they're account holders of, and you can identify that account and you can say, oh, look, this trader over here, he works for Goldman Sachs, and look at that position, look where his stop is. No, it's nonsense. Oh, look, the bankers put their stops over here, and you know, the hedge funds put their stops over here. Nonsense. Those larger institutions, whether they're hedge funds, whatever they are, they're not using retail tools or retail methods. They manage risk in a variety of ways. They can use options, they can use futures. I mean, they do other things, other derivatives, and they have complex hedging strategies. I mean, they employ people, right? And that person's job is to monitor and manage risk for all of their portfolios. You think this, well, I think your stop here is too tight, John. You better move that stop a little bit, and I've done my job. Come on. So anyone that comes up with that nonsense, please, there's no way to know. They could sit there. I've seen where people, oh, bankers do this, and don't get caught up in that, please. Nonsense. Look at support and resistance. Usually, and what they're doing anyway is they're looking at support and resistance levels. levels that you can see right here on the chart. They're just trying to add some magic to it so that maybe you pay for a subscription or something. Wow, this guy knows banker stuff. I'm going to pay $1,000 a month for his stupid chat room. All right. So I hope that answers your question. I know I could be very cynical at times, but let me tell you, this is the most deceptive industry in the world. I've said this before. It's worse than the used car business, okay? So any type of retail information that's given to you is often a lie, it's an exaggeration, it's nonsense. Often they're trying to sell you something. Look, I'm a vendor too. I have a training program to sell and all that other stuff, but I try to be as transparent and as honest and as clear as possible. I genuinely, people, well, why would you want to help me? No one helps anyone in this business. That's true. Why would you want to help me? I'll tell you why. There's two reasons. People, you should know this. Number one, I consider myself a retail trader advocate because I've been in your shoes for a long, long period of time, being misled, being fooled, and being robbed. Okay, so it would have been nice if someone came out and told me some of these things that I share, because perhaps it would have saved me thousands of dollars and time and maybe some hair follicles. Okay, so I do have a soft spot in that sense. All right, also, I have a lot of knowledge and a lot of wisdom, and I've made a lot of mistakes. That information does have a value, and I do, being a market timer and trader, I do have a strong appreciation for passive income, okay? Because risk money is hard money. It's not easy at all. And if anyone knows that, for sure, that's me, okay? So when you have to deal with hard money all the time, and you have something that you can sell, why not? Right? Passive, there's nothing wrong with passive income. So that's the reason why, those are my reasons for doing these things. I'm just being honest. Okay. So anyway, just wanted to share that with you. Let me see what else we got here. So Vanessa's, you can add Mark on Twitter. Make sure you get all the tweets. Yes, because all my stuff does go out on Twitter, as far as like when I'm doing what do you call it? Any type of stream or anything else, it does get sent to Twitter. Okay. If I have an article on TradingView, thanks, Dean, for mentioning that. Alex from Romania missed the stream today. Okay, no problem. Okay, no problem. I'm just catching up on the chat here. So sorry if I skipped over your thing. I got to wrap this up here momentarily. How can my link not be working? Let me try something else. Let me see. Let me think about that for a minute. I know that's the correct link. Let me see. Should I type it in here? No, I'm not going to do that there. All right. QNGCC. Maybe I forgot something in there. I don't know. But anyway, I have a webinar coming out on Wednesday. I would have liked for you to have seen it. QNGC. I'm going to try changing I'm going to try something here real quick. Let me see if this works. Okay. And if it doesn't work, it doesn't work. But let me see. Maybe I'm supposed to type in webinars and then QNGCC, and then I have to remember this stuff. Okay, maybe I forgot the word webinars. Maybe that works. Okay, anyway, let me know. All right, let me just go back. Let me go back. All right. Error 404 comes up. Okay. All right, thanks guys. Zelta, hey, good to see you. Okay, so I tried correcting that URL. I copy paste the link from my email invitation. Oh, thanks, Birak. You know what? If anyone pastes a link in here, it gets filtered out. So maybe you could type that link in a way that it won't get filtered, because I have these filters on here because of spammers and stuff. So that's why the link won't show up. Thank you. I appreciate that though. Okay, got to go. Okay, no problem. Okay, thank you. I appreciate that. Is it a good time to buy long and bonds? Bonds ETF. Okay, good question. Let's go back to the bond market real quick. So let's start with the 10-year. You can use this for ETFs. It doesn't matter. This is the bond market, right? 10-year note. So as far as longs go, it's too early. Let's go to the weekly. Like I said before, consolidation. While we do have a potential change in place, this thing may test the lows again. If you're going to start going long bonds, you should at least wait until there's some sort of confirmation of a resistance break, at least. Even then, that's really, and there's no guarantee, but that's how I would treat something like that, right? Or if you want to take a more conservative risk, at least look for the double bottom, okay? At least, and wait for confirmation there, okay? Bonds are tricky, and you're better off waiting more than not. There's no hurry with bonds. Bonds take a very long time to do stuff, okay? But I mean, at this moment, I would not be investing in bond ETFs. I still believe it's too early. Do you think 75 or 100 points? So Alex, to answer your question with the FOMC, I believe, again, my opinion doesn't mean anything. The market doesn't care what I think. But I believe that 100 basis point hike is priced in, okay? The market knows about this. So if the Fed raises rates over the next few meetings, I would not expect anything dramatic out of that because the market knows. It's the press conference and what they say after, right? Like what kind of hints do they provide about, after that series of hikes, okay? So I would agree that it's priced in. If they change their tune and something is not priced in, you're going to see a dramatic adjustment, right? So if they come out earlier and say, yeah, we're going to stop in 3 months, we're just going to stop and we're going to see how things go. That's not priced in. So you understand what I'm saying? So if there has to be an adjustment, you'll see a very, very sharp adjustment very quickly if they say something like that at a press conference. But I mean, it's hard to believe that the Fed, the Fed's not playing games. They're doing what they have to do. So just keep that in mind, okay? Love that Brooklyn truck driver. Brooklyn truck driver. Who you calling a truck driver? All right, Kai. The way banks screw over institutions is by trading against them and selling them their bags. Yes, that's been confirmed by whistleblowers. I doubt they stop loss hunt. Right. Well, there's all kinds of. I mean, when it comes to like exchanges, they have their own games that they play. Understand exchanges. Not like Coinbase has to follow some rules, but there are exchanges out there. They follow no regulation. They can do whatever they want, and they can basically stop, hunt, rob you. They can close their doors. They got your money. Okay, they can halt withdrawals and say, well, we can't have these withdrawals right now because the system is whatever. There's an error in the system. They can do whatever they want. There's no regulation. Okay, stock exchange, the New York Stock Exchange can't do something like that, because they're heavily regulated, right, against things like that. Anyway, just so you know, be careful where you put your money. All right, probably one of the few people in the entire internet that's selfless. Well, I appreciate that, freeloader. I try. I do try because, my reputation obviously is important to me, and I do have to follow a code of ethics. Whether I want to or not, I have to follow it. As a CMT, I have to. So, when you're listening to someone and they're not a CMT, just keep that in mind. I'm not saying all CMTs are perfect, but if they don't follow their code of ethics, that title, which we have to work hard for and pay money for, gets taken away. Okay, it took me 3 years to get those 3 letters. Anyway, so I appreciate that. Okay, no problem. You can be saying, I appreciate that. Hey, Todd, 10K is going to be the bottom in Bitcoin. Believe me, I've measured it. There's no question about it. Oh, I'm sure Todd's joking. Yeah. Okay, that I can tell. My link from the email invite works, but not what you posted here. Okay. Wedge. Okay, so you know what? Wedge, again, maybe you want to share that link. I don't know if I got the right link. The link in the email is correct. It's just my memory is off today. Okay, still doesn't work. Okay, so the webinars one doesn't work either, huh? All right. So let me see. Nian, one of the C in the link should be capital. That's why it does not work. Try the link I sent. Oh, one of the C's? Oh, okay. Hold on. Let me try that again, you guys. I have to try it. Because if I'm sharing this link in places and people aren't getting it, I'm going to have 3 people show up again. Okay. Here, let me try this. So it's QNGCC, little c, like that. And then price action, maybe it's this one. One of the C's is capital, and I'm putting 2 capital C's. QNGCC. Thank you, Burak. Thank you. Appreciate that. See, I got some helpful people here. Burak is a student as well, previous student. Okay, CPI was a surprise for you? No, I mean, inflation at 9.1%. I don't pay attention. Okay, here's why. Those numbers can come out all they want, right? They're lagging, and I'm interested in how the market perceives that information and prices it in. That's all I'm interested in. So I don't follow the economic numbers. I actually follow the price. So if S&P gets hammered, I know wasn't too happy with that number. If S&P rallies, then it must like something about the number. That's all I need to know. I follow price, right? Because really smart people take positions and all that kind of stuff because they do all the work and they interpret what the price means, what those numbers mean. I just let price tell me. Okay, and that's accepting that price knows all the information in the world, which is true. All right, thank you guys about that link. We will see printing machine turned on again for the next 5 years. I don't know. I mean, at this moment, no. But if they do start printing money again, which you have to understand something that I recently came across. I should have known this, but I can't remember everything. Economic cycles, right? Whether it's an expansion or contraction, a typical economic cycle historically is a 5-year cycle. Okay, so think about that. It doesn't have to be a 5-year, but on the average, it's a 5-year cycle. So if we do have another expansion, right, at the beginning of that, it's within reason to figure, okay, this market should be somewhat bullish for the next 5 years potentially. Okay, so we're not there yet. Right now, we're just basically dealing with bearish stuff. Is this bearish stuff going to go on for 5 years? I mean, we've maybe been into this like half a year, maybe something like that. Do we have another 4.5 years to go? Again, there's nothing that guarantees that we're going to have a 5-year cycle. It could be shorter, it could be longer, right? But on the average, historically. So just something to keep in mind, all right? We also, over the next few years, we do have a lot of political changes taking place in this country, potentially, right? We have midterm elections and we have a presidential election. And those type of events, when balance of power changes, monetary policy can change. When those things happen, a lot of times the smart money can anticipate how that policy will change in advance. And those effects will show up in the prices of things like bonds. Okay, so the bond market will most likely start pricing something in advance. Okay, that's why you have to pay attention to the bond market structure. Not, who cares about all this economic this and economic that. Yeah, sure, it's good to know, but see how the market interprets it. That's who matters, the market. Not, oh, well, this guy's an expert. He's a bond expert for 30 years and he says this. Stop listening to those people. Price doesn't lie, okay? People lie. Price does not. So that's really where you need to look. That's where I get all my information from. All right, people think I'm nuts, but I trust the price because I know what price, I know how price works and what it does. All right, so good question. Looks like BTC turned at the 382 fib level from, okay. So can we call that an inversion? Is this true? Is this a true, maybe you mean trade idea? I think you skipped the question above. Okay, if I skipped your question, I apologize. I got to wrap this up here in a couple of minutes. But to answer your question, if you're talking about this 382, yeah, that's what you're talking about. I mean, it's rejected that it can turn into an aggressive swing trade idea. I mean, this level alone is a level on a number of magnitudes, not just on this one. So this can turn into a bearish swing trade idea. It's just not there yet, but it can turn into one. If I see it and I have the time, I'll try to call it. I'll try to call it publicly on TradingView as a short. Keep in mind, I don't plan to short it. Okay, but I'll call if other people are interested in the signal and they want to see it. It can be up to them on how they want to deal with it. Okay, of course, when I call something like that, I always make sure to define what kind of risk you're taking. Okay, what you say, pure gold for me, really, I appreciate that, Alex. Okay, all right, so that was my link again. It is the wrong again. Okay, still not working. Doesn't work. Are the links I'm posting getting scrubbed? Yes, Wedge. It's the links that you're sharing are being blocked because I have a filter on here because of spammers. So you need to put webinars, webinar.getresponse. Is that what I need to put? Webinar first? Ah, man, I think my TradingView link is wrong then. webinar. I think I put get response first. Ah, man. Okay, so webinar.getResponse. Let me try that again, guys. I appreciate you guys correcting me. I should know, you think I'd be better prepared. That's it, webinar.getresponse.com, QNGCC, and then it's price action, right? This should be the correct link. So people, if you're still here and you're still watching, that's the webinar link. If you haven't registered for it, webinar.getresponse.com. Okay. You mistyped, instead of G, you wrote 2C. Oh, try this again. QNGCC. Yeah. Okay. Got it. Thank you, guys, because this should be the correct version of the link. Sorry for sharing the wrong link. All right. All right. Cool. All right. So people, if you're still here and you're still listening to me, that's my webinar link. My webinar on Wednesday. See, I can't do this in TradingView. So many people will flag me for what do you call it? For breaking the house rules, because a lot of people don't like me on there. I make a lot of people look bad. So anyway, that's the link. Subscribe to my webinar. Register for my webinar. It's free. Not subscribe, register. And I'm going to be going over some interesting things. I'm going to be talking a little bit about my analytical strategy. If you're a previous student, you're welcome to come. You're going to be familiar with a lot of this if you're a student. And I'm going to also highlight the RSI. Okay. Like I said in the beginning of the stream, I am not using the RSI. I don't plan to use it, but some people like it, and a lot of people use it incorrectly. So I want to give you some pointers on how you can incorporate it into a swing trade strategy like the kind that I share. Okay, there are some value in some of these tools. The thing is, you have to understand where it fits in. All right. If you just put an RSI on your chart and you think you're just going to follow the signals, it's going to be random, and there's no way around that. There's no advantage. Each and every whether it's an oscillator, a moving average, a Bollinger Band, whatever it is, there's absolutely no advantage to using these tools. So your outcome should be expected to be 50-50, meaning you're going to win half the time, you're going to lose half the time. You figure, well, that's not too bad. Well, you figure you have a smaller loss and a larger win, you should come out ahead. Theoretically, you should. But there's a cost. Okay, there's the spread, there's slippage, and then there's emotional complexity. Right? These costs add up, and the more frequently you trade, the less of a chance you have to make any money. Right? That's the advantage that exchanges and forex dealers and all these other people have against you. That's why you can't win at 50-50. Okay? But in theory, you should be able to. So, okay, you guys. So, all right, we just tolerate you here. All right. Cool. Hey, guys, thank you so much for helping me correct that link. Just backing up, Jen. Correct. The webinar link in the YT description also. Oh, thank you. Yes, because I put it there wrong as well. Today's Monday. All right. I like to use the EMA. A lot of these oscillators, believe it or not, they basically incorporate an EMA, but instead of putting it on the upper part of your chart, they just put it in a graph on the lower part of your chart, right? To basically take out some of the noise that has to do with price. That's what most of these tools are for. They're for smoothing price so that you don't get confused by all this erratic, this kind of stuff, which could be very confusing, right? Unless you know how to see through it. So we're going to talk about that in the webinar. The webinar is going to be educational, not analytical. I'm not going to sit here and do analysis. So don't come to the webinar asking me, can you show me Cardano? I'm not going to show you Cardano. All right, we're going to talk about analytics, and we're going to compare that to trader mindset. All right, so I think it'll be worth your time. So please come to the webinar. I have to correct the link in the description, but you guys have the link. All right, all work, no play. Well, you should know that, right? Because you're all play on the beach all day, Bill. I'd like to be on the beach all day, but the beaches in Jersey are not exactly. We have no choice here, but I'll take Florida beaches over New Jersey. Anyway, all right, you guys. So I got to wrap this up now. I got some people still here. Cool. So, hey, I want to thank you all for taking the time here with me today. I hope you got something out of the stream. If I missed your question, I apologize. I am going to be streaming next Monday, but come August, I'm going to stream bi-weekly. Okay, I'm going to take every other Monday off. I'll remind you again, the reason I have to invest that time into things that actually are, more conducive for the effort that I'm putting into them. All right, so I'm sure you understand. I need to see some sort of return in the time that I put in. I've been doing these streams for quite some time. My numbers don't grow, and I know why. So anyway, I have to just change that up a little bit. Anyway, I'll remind you then. But next week I will be back on Monday. I will be back on TradingView as well. I just had to skip today because I didn't want to put all the setup time into that for have to five people show up, and then I can't even talk about my webinar, which I put the incorrect link for anyway. No wonder why no one shows up. All right, so anyway, you guys, if I missed your question, I apologize. Please come back next week and ask again. I'll be happy to answer it. Try to come early to the stream so that before I get into everyone's questions, your question is there first. Some people do that and I get to their questions first. All right, so anyway, so again, thank you for your time. So enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you so much for watching.